morning, you're watching Businessworld Live. I'm Danny Laurel.
And I'm Jess De Los Santos. Here are the biggest stories to kickstart this trading day, Monday. The Bangko Sentral says it may start raising interest rates by the second half of the year.
The EU threatens to cut the country's trade perks over human rights issues, but Trade Chief Mon Lopez says the allegations are nothing but, quote, fake news.
Local shares are seen to remain volatile. That's on the back of the ongoing tension between Russia and Ukraine and its impact on oil prices.
And after some delays, the REIT will finally list on the local bourse tomorrow. More companies are also planning to go public by next month. We begin our broadcast with the Bangko Sentral hoping to normalize policy rates by the second half of 2022.
This as the output gap caused by the COVID-19 pandemic is expected to close in the latter part of the year. The central bank said that at the moment there is enough headroom for a continued accommodative stance on the back of a manageable inflation environment. But the BSP noted that an eventual normalization, which includes raising interest rates, may take place once inflation risks rise and economic recovery is sustained. Last week, the Monetary Board kept the benchmark rate unchanged at a record low of 2% to support the ongoing recovery of the economy. The benchmark rate is used by banks to price their loans. The Bangko Sentral said the timing of normalizing policy support would depend on a number of considerations, including inflation outlook, liquidity conditions, and public health. BSP Governor Ben Jokno also said that the BSP would continue to carefully develop its plans of unwinding support to the pandemic-battered economy. Now, meanwhile, despite Fitch Ratings keeping its negative outlook for the Philippines, the Bangko Sentral says the country managed to maintain the same rating throughout the pandemic. That's in contrast to downgrades seen by other economies around the world. Now, recall that Fitch affirmed the country's investment grade but maintained its negative outlook and uncertainty about its medium growth prospects due to rising debt and challenges in pandemic response. The outlook for the Philippines was revised to negative from stable in July last year due to the impact of the pandemic. A negative outlook means Fitch could downgrade the Philippines' credit rating in the next 12 to 18 months. Despite this, BSP Governor Ben Jokno said they are still expecting rising credit activities and a favorable inflation outlook to support growth moving forward. Jokno maintains that the country's banking system has kept the impact of the health crisis manageable. Then heading on to the last full trading week of February already, and the geopolitical concerns continue to rock global equities. What's it looking like?
Not that great, Jess. Exactly what you said. Take a look at how Wall Street closed on Friday and Europe as well. And, that sea of red seems to be continuing as U.S. futures are declining this morning, though they are shut for a holiday today. You've also got Asian stocks basically set to fall. This, of course, as you mentioned, deepening geopolitical concerns. What is going on now? Reuters reported that Russia's strategic nuclear forces held exercises overseen by President Vladimir Putin. That was on Saturday. We've also got Washington accusing basically Russian troops massing near Ukraine's border of advancing and being, quote, poised to strike. You've also got President Joe Biden of the U.S. on Friday saying he's convinced that Putin has decided to move against Ukraine. But of course, you've got Moscow continuing to deny its plans to invade, and markets are pretty shaky. But if you take a look at our own index, though we are down by 1% already, we were actually up week on week last week. And, there's a lot of focus on the fundraising that's going to happen. You mentioned in our headlines here, CRUDE, after some delay, they will finally be raising, of course, their IPO there. That will be tomorrow. You've also got a couple in the pipeline. Bank of Commerce, of course, that was already approved by the SEC. But you've also got RASLAG, which is a company that is looking to raise 805 million pesos to fund solar projects there. You've also got Balay ni Frutas. Of course, Frutas had just listed. That is looking to IPO as well for 309 million pesos. And of course, Bank of Commerce, 3.5 billion pesos. The CRUDE tomorrow will be for 6.4 billion pesos. Another one, this according to Bloomberg, they're citing an IFR report. JG Summit Petrochem, according to this IFR report, is looking to raise around $400 million to $500 million and considering several options, including an IPO or a stake sale. But the company has not responded to IFR's email seeking for comment. Now, this, of course, bodes well for the economy, particularly the stock market. This, according to Phil Stocks, these activities indicate that businesses are anticipating and are preparing for a stronger economy. And this could alleviate negative sentiment that we've seen in the fundraising, particularly Medilines, when those stock prices drop amid their IPO and the cancellation of Tito CMI's rights offer. Now, speaking of Medilines, just a quick peek on that company that is up by 3.5% today. This, as they have mentioned, they're expecting another record year in 2022. This after the company closed contracts to install 1 billion pesos worth of cancer therapy equipment. The company said last week that it ended the year with a 50% profit jump. That's compared to the 103 million pesos it generated in 2020. That's amid top line growth of 10% to 1.6 billion pesos.
Here are the other headlines we're keeping our eyes on. The DPWH proposes to move overhead utility lines in Metro Manila underground. The agency's office in NCR has submitted the proposal to the agency's central office for a feasibility study on making all electricity and communication lines underground, at least in the capital region. Regional Director Nomer Abel Canlas says they are eyeing to start the project along major roads like EDSA, R10, and C3. Canlas notes that apart from aesthetic advantages, underground cables also help avoid accidents like electrocution, especially during disasters.
The country's balance of payment position stood at a $102 million deficit. That's in the month of January. That is the smallest deficit in 10 months, or since the $73 million gap in March of 2021. This as the government continued to service its foreign debt. The January BOP was slimmer than the $752 million gap in January of 2021, but was a reversal from the $991 million surfeit in December.
European aircraft maker Airbus is set to support two of the Philippines' biggest airlines, PAL, through cabin modification and Cebu Pacific for component support. PAL says it is working with Airbus to add seats to 15 of its aircraft in a bid to accommodate more passengers. The flag carrier is also extending its flight hour services material program with Airbus to cover more of its fleet. Meanwhile, budget carrier Cebu Pacific has chosen Airbus's FHS Materials Management to provide component support for its fleet of 16 A330 NEOs.
And amid the rising oil prices, the Budget Department still has yet to release the funding for the fuel subsidy for public transport operators. Now, Malacanang says the Transportation Department and the LTFRB have already submitted the necessary documents to the DBM for the fuel subsidy. The budget for the fuel subsidy program can only be released when the average Dubai crude oil prices reaches or exceeds $80 per barrel for 3 consecutive months. Budget Undersecretary Tina Rose Caldas said this benchmark has been reached and that the agency has received the submissions of the LTFRB and the DOTR. But the DBM says that it still cannot release the funds as it is still waiting for the DOTR to submit an additional requirement.
The Finance Department says LGU spent nearly 119 billion pesos for their pandemic response. That's from April 2020 to June 2021. More than 76 billion pesos of which came from their own funds. Over 35 billion pesos were sourced from the national budget through the Bayanihan to Heal as One Act, while about 5 billion pesos came from unexpended cash balances of public funds. The remaining amount was from grants and donations. The DOF says the funds were used for operating expenses, food assistance, and financial assistance to all affected sectors. After the break, European lawmakers are threatening to withdraw the country's trade perks within the EU.
More of that and other stories when Business World Live returns. Stay with us.
You're still watching Business World Live here on One News. I'm Jess De Los Santos.
And I'm Danny Laurel. The European Parliament wants the Philippine government to act on alleged human rights abuses here in the country.
Otherwise, the Parliament warns they would temporarily withdraw the country's trade perks in the EU. Mobile journalist Pamela Vasquez with the rest of the story.
The European Union is threatening to cut the Philippines' trade privileges over lingering human rights issues. 627 EU lawmakers approved a resolution condemning jaguar killings and the red tagging of activists and journalists. At stake is a trade agreement known as GSP+, which allows the duty-free entry of 6,274 Philippine products into Europe. These are mostly agricultural goods like bananas, mangoes, and fishery products. There's also processed food, textiles, shoes, metals, and car parts.
We demand an immediate end to extrajudicial killings, an end to red tagging human rights defenders, journalists, trade union activists. The war on drugs is to end immediately. It's not so increasing its requirements on companies' human rights conduct throughout their value chains.
The current GSP Plus agreement will expire in 2023, and the Department of Trade and Industry has been working hard to get it renewed. However, the European Union set strict conditions on its trade partners, including on environmental protection, labor, and human rights. Talks have also dragged on with President Duterte, lashing out at the EU early in his presidency.
The winner of the upcoming presidential elections in Philippines will have a major task to reverse the dire human rights situation, which has seen an appalling deterioration under President Duterte.
At least 500 members of the Philippine Exporters Confederation or PhilExport are actively shipping products to the EU. That means if the GSP Plus is revoked, there could be huge job losses. The European Parliament also raised concerns that civil rights will be quote-unquote further violated and restricted in the upcoming May election. It called on candidates to refrain from using disinformation campaigns and troll armies. Malacanang has yet to respond to the EU's latest resolution. Mobile journalist Pamela Vasquez, We Are One News.
Meanwhile, Trade Secretary Mon Lopez dismisses the EU's allegations on human rights abuses in the country as fake news. Lopez says that the European Union's claims only give false impressions on the real situation in the Philippines. Trade Assistant Secretary Alan Gepti also told The Big Story that this is not the first time the EU passed a resolution on alleged human rights violations in the country. Gepti insisted that the Philippine government has already responded accordingly to the issues.
This resolution was passed in 2016. They also passed another one in 2017, 2018, and also in 2020. So this is not something new. As far as this issue is concerned, I think we have to take note that the Philippines, particularly the Interagency Committee addressing this issue, we have been very cooperative and we have responded this accordingly.
Now, how are these renewed threats of trade sanctions from the EU going to affect the country's recovery efforts? That and more with Stephen Cochrane, Chief Economist for Asia Pacific over at Moody's Analytics. Good morning, Steve. Thank you for joining us.
Good morning.
All right, so you've heard that report. It's not the first time, at least according to the DTI, it's not the first time that this at least has been issued by the EU. This happened in 2017 and also in 2020. What makes it different this time, and how much do we stand to lose if the GSP agreement is not renewed or revoked?
Well, yeah, I think what makes it different now is with the election coming up, it in a sense puts a threshold out in front of the European Union to perhaps make a final decision on this. I think what it, from an economic point of view, what it illustrates is that the risks, if you will, to global trade, both for imports and exports, has become so multidimensional over the last 3, 4, 5 years. If you think about it starting, say, with the US-China trade war and then leading to the pandemic and the supply chain disruptions that resulted from that, and then the political considerations such as coming from with these announcements from the EU. I think it's going to be increasingly important in the coming months, coming years, to simply make sure that there's a very diversified effort, diversified market out there for exports, diversified sources for imports, and to be able to manage these multidimensional risks that is much broader than what I think many people might have imagined. Again, say before 5 years ago or so.
And yes, Steve, we're talking about 6,000 plus products here from the Philippines being affected by these trade perks if they do get to be canceled. How is this going to? How much of a downside is this to our post-pandemic recovery?
Well, it's a modest downside risk. I think that's perhaps the best way to say it. The European Union is the fourth largest trading bloc with the Philippines, after the U.S. and China and Japan. So it's not the biggest bloc, but something short of about 10% of total trade is accounted for by trade with the European Union. So it's meaningful in terms of trade and certainly meaningful in terms of employment. And when you look at some of the major commodities that are exported, largely agricultural products, but increasingly some manufactured products as well. I mean, that's very, very important for both income and employment in the Philippines. So it's not something that can be ignored by any means.
Hey, hi, Steve. This is Daniela jumping in. Speaking of risks, you did mention moderate risk, but we do have another one on the table, that is the imminent Fed rate hike on March, pricing in 50 basis points there, but maybe up to 5 or 7 rate hikes in the coming year. And the BSP staying put as of their last meeting, saying that we don't need to necessarily keep in step, but also Governor Diokno there is sort of saying that a reversal may be happening. When do you see this reversal happening, and how fast should it come, and how big of an impact will that be to an economy that's still on the mend?
Mm-hmm. So perhaps a couple of positive points. One is that it seems the economic turnaround in the Philippines has improved. The fourth quarter growth numbers were very, very strong and really illustrated that finally, I think one can say that the Philippine economy is heading towards a more solid recovery than what we might have thought about in the past. Even more important, inflation has come in. Inflation is right about in the middle of the BSP's target range, and the governor did seem quite comfortable in his comments on Friday about being able to manage policy with the modest inflation rate today, and that they'd be very patient, perhaps waiting until the second half of the year to raise interest rates in the Philippines. I think the risk comes really in terms of how quickly the Federal Reserve and then other developed market central banks began to normalize policy. If indeed the Fed follows what seems to be its current outline right now, is a series of 25 basis point hikes beginning in March and extending through this year into next year, then that rather stable pace of interest rate hikes may be quite manageable for the Philippines. First of all, even if there's an interest rate hike in March, then something else in May or June, it may give the BSP time through the first half of this year, at least, just to make sure that the economic recovery really is on solid ground in the Philippines, and that inflation remains fairly well contained. I think the risk comes if in March the Federal Reserve hikes by 50 basis points and sends some signal that they may accelerate further and maybe do a series of 50 basis point rate hikes. That's not what I expect, but that certainly would raise the risk that the BSP would have to begin raising rates sooner, or perhaps raise rates a little faster than they might have wanted to at this point.
Okay, so it's more the uncertainty of how aggressive these rate hikes are going to get. Talking about the inflation forecast, the BSP has jacked that up. Nevertheless, there's also these threats of oil prices just staying elevated. How worried are you about this Russia-Ukraine situation and the impact on the Philippines as a net oil importer?
Yeah, the Russia-Ukraine situation is so hard to gauge right now. We just don't know where it's going to go. If it does result in an outright conflict, certainly in the near term, uncertainty will certainly lead to a hike in global crude oil prices, at least for who knows, a series of weeks, a couple of months. What is uncertain is whether any kind of incursion by Russia into Ukraine would be more than just something on the fringes, but if there was something much broader, if there was a movement into the core of Ukraine, that of course would lead to some very significant sanctions from the U.S. and from the EU, and perhaps again some retaliation on the part of the Russians in terms of perhaps shutting off natural gas to Europe. The key risk for the Philippines, of course, is what happens with crude oil. If sanctions make it very difficult for Russia to trade with the rest of the world, or if for some reason crude oil supplies from Russia are cut off or minimized, that would certainly lead to higher energy prices to the Philippines and really to most of Southeast Asia, and could have an impact on inflation and result in somewhat slower growth in the Philippines as well. So it's really hard right now to put any kind of a percentage probability on where this goes, given the uncertainty of the situation in Ukraine right now.
All right, Steve, now overall as well, speaking of domestic growth, you see the Philippines is still as one of the faster growing economies in Southeast Asia, only second to Vietnam. In fact, you hiked your forecast to 5.6 to 6.2%. But even at that, that's still going to be below government targets of 7 to 9%. Why do you see us falling short of that target, and what's it going to take for us to get there?
Yeah, as you say, the Philippines economy looks pretty good right now. That the current growth looks quite healthy. One of my main concerns about the Philippine economy and why we still are a little bit conservative in terms of our outlook is that as a result of the really sharp downturn in the economy when the pandemic hit, you may know that, aside from India, across all of the Asia-Pacific region, no country got hurt more than the Philippines, given the depth and length of the economic shutdowns in the country. And my concern is that a lot of small and medium-sized enterprises just simply aren't going to be able to get back on their feet, won't be able to start up and operate even in a more solid economic environment. Now, there are some upsides to this. One is that credit conditions look pretty good. Capital positions of banks in the Philippines are fairly strong. Much depends on the willingness to lend to small industries. If that liquidity is there, then small enterprises may come back faster than perhaps I may have expected. The second impact is from international travel. Of course, a really important component of the Philippine economy is spending by international travelers in the Philippines. I still think that the turnaround, the recovery of international travel may be a little bit slower than what others might expect, simply because of in a sense, the roadblocks that are put in front of travelers if they're crossing boundaries, in terms of having to have all of the proper paperwork in place, and the pre-testing and post-testing and any quarantines that may be required, that travelers from places like Australia, the US, Europe, may be just more willing to travel domestically rather than cross borders for a while until things really open up. And finally, we don't really know when travelers from China will arrive in the Philippines again. And the arrivals from China are very important, not only in terms of the numbers of arrivals that the Philippines was used to prior to the pandemic, but also the elevated spending that Chinese tourists generally engage in that support the Philippine economy when they're in the Philippines. So that's still very uncertain. It could be next year, really, before the Chinese are allowed to freely travel abroad.
Other than tourism, of course, much of that growth for the country still depends on who will be elected as the next president here. It's going to be a crucial juncture here for the country. What's at stake here, and what should at least be on the economic agenda of the next administration?
Well, the next administration will have to look at some of these issues that I pointed out, particularly small and medium-sized enterprises, making sure that there is liquidity for them when they need it. I think also linked to that is the need for additional training, retraining, upskilling of the labor force that maybe have been out of work for a year or two or more, and address that, try to upskill the labor force towards the kinds of industries that will be growing very strongly going forward. And then another aspect of policy, I think, will simply be infrastructure development. Prior to the pandemic, the infrastructure program of the administration was very important, both in terms of direct impact on the economy from construction, and in terms of the potential impact longer term of just improving productivity as transportation links and such are easier around the country. And I think there's a lot of potential for the need for continued investment in infrastructure in the Philippines, just to bring the productivity growth of the Philippines up with some of its peers in Southeast Asia.
So much to take in, at least for the next administration. Thank you very much for your time this morning. Again, we have Stephen Cochrane, Chief Economist for Asia Pacific over at Moody's Analytics. Thank you, Steve.
Thank you.
And that's a first look into the business day this Monday, February 21, 2022. I'm Jess De Los Santos.
I'm Danny Laurel. Mask on, wash hands, stay safe, Philippines. We are One News.